it looks like the market manipulation has switched from the Western markets in London and New York to the Asian markets in Shanghai. At least that's been the case for the last 2 days. I thought I'd talk about what's been going on, particularly yesterday and today, because much of the action occurred overseas, and there was a very specific reason for the action. As it turned out, that the pressure downward that started on really late Wednesday evening and continued until this morning. And so in order to set the table for that, let's just go back very quickly and talk about what's happened in the last week. On Thursday, we had an all-time high of a little over $120. On Friday morning of last week, it opened up at about 115, went up to 118, and then it just slammed down, just kept on going down. At one point, the market was down $45 from the high just set a few hours earlier, but it bounced back and closed about $85. The low for the day was $73.67, and that's going to be an important mark for us to keep our eye on. On Monday, it went up a little bit, but went down. It closed close, I think, to $79. Opened up the next day, gapped up just 5 cents, and it started stair-stepping its way up for that day and the next day. On Wednesday, again, it opened up, had a fairly normal day, if you can call a $9 range normal. And then Wednesday night, late on the Shanghai market, it started to go up. I think it went as high as $92, and then it dropped down close to $71 by the time everything was over on Thursday morning. And then it ended up closing pretty close to its low of the day at $70.82. And then, as soon as the market opened in Asia, it went down again in a very quick manner. $6, so maybe not as much of a drop as it had been, but certainly the lowest point it's reached for over a month now. And then something happened and it started to come back up. And in fact, when the markets opened in the U.S., the market was up, and it's been fairly steady. The high for today, we're at 2 o'clock Central Standard Time, so we've still got 2 hours before the market closes. And so these numbers could change a little bit, but here's where we opened. We opened at $70.82, dropped down to $63.98, have been as high as $78.28, and then as I'm filming this, about 2 hours before the close of the market for the weekend, we're at $79 and some change. So we're up for the day. We seem to have weathered the storm, at least for today. And I wanted to just step back and look at what happened. On Wednesday night, there was a very large sell order put in, or a series of sell orders, shorting the silver market in Shanghai. And as it turned out, this was done one huge trader. I think he had over $3 billion in profits from the gold run up, and now he's been shorting silver, at least on the Shanghai market. And so he was the main player, but there was another maybe half a dozen speculators, very large, who were short selling the market. And they were the ones that brought the market down starting on Wednesday night. And then they started the same thing the very next day. At that point, the regulators in Shanghai stepped in and noticed that they had exceeded the amount of contracts they were permitted to trade and forced them to close them out. And so they did do that. Again, the market came back up fairly rapidly, and we are where we're at right now at a little over $77 just before the market closes on Friday. And so a couple of interesting points. One, usually we see most of the activity, if not done on the Western markets, it's initiated by players from the Western markets. They may be trading Shanghai, but it's still those players, the big players that represent banks and other entities. But these last 2 days, the Chinese players were the ones that were making the market move. And it was interesting how quickly the Chinese regulators stepped in. Now, I realize that this is still the CCP that rules this country and therefore who governs the Shanghai Exchange. But it's interesting that they seem to be a little bit more serious about regulating their own markets. They stepped in within 24 hours from the time this began until the time it ended and took care of it fairly quickly. You compare that to the Western regulators, especially in the United States, where they will take sometimes years before they will act upon manipulation. And we do know there's been manipulation. There's been billions of dollars of fines against banks who have made hundreds of billions of dollars in profit. And so you get the idea that the regulators and the banks have some sort of a relationship where at least the regulators are permitting the banks to do what they've been doing. And when it gets so obvious that they've been caught, well, they'll put a big fine, $1 billion, $2 billion, but compared to what they've made, it's nothing. There's something to really keep in mind about the Western markets and especially the U.S. market, and it involves the Federal Reserve. The Federal Reserve is a privately owned entity by the same stockholders very much who own the big banks, Bank of America, J.P. Morgan, and so on. And so there is an incestuous relationship between them. The banks support our politicians very heavily when it comes to the elections, and so many of our politicians just turn a blind eye to what the banks are doing. And in fact, if the banks get overextended, on several occasions in the last decade or two, they have intervened and have bailed the banks out, at least the ones that are favorable to them. And so we have a relationship that is hardly a fair or balanced regulatory system. It is very much more akin to something where you've got your right hand looking at what your left hand's doing. It's from the same body. And so I'm not saying that the regulators all have interests in the banks, but they certainly appear to treat them very kindly. So the point of all this is when Shanghai saw what was going on, they did intercede and they cut it off. And once they did, the market has started to come back up. Now, in the interim, we've had all this activity. And think about the activity. On Friday, we had a $45 spread between the high and the low. Monday, a $17 spread. Tuesday, a $10 spread. Wednesday, a $9 spread. Yesterday, a $20 spread. And then today, so far, a $14 spread. Remember, from the years 1984 to the year 2004, we hardly had a $2 spread over that 20-year span. And so to be talking about spreads or differences between the high and the low just on one day, the lightest day this last week being $9, gives you an idea of how wild the silver market has become. And because it's wild, I think that people really need to understand what they're getting into when they start investing in silver. There's a lot of people who have come into the market in recent months, especially those who are just in it for the next hot thing. A lot of people who'd been investing in Bitcoin, and then when Bitcoin slowed down, well, here's the silver market just going up and up and up and seeming like it can never come down. And so they piled into it. A lot of people piled into it, seeing a market that maybe could help them get rich quick, or maybe reach some goals of retiring a little bit earlier, whatever their dreams were in that. And so they just started stacking on and on and on, and the market just kept going up. And on the big side, the commercial side, there's a legitimate demand that is occurring right now that is starting to overwhelm the supply. I think most of you are aware that in the last 5 years we've had a deficit between the total world mining output in silver plus the total world recycling in silver, anywhere from 100 million to 200 million ounces. And it seems like we've run out of the world surplus, or at least we've run out of the world surplus that is not in hands who are willing to let it go to meet the market's needs. And so this year, late last year and early this year, it seems like that supply is way under the demand that we're having. And because of that, there's been some very organic movement upward. But After we had the natural movement upward from supply and demand, we had all those people piling in that we've talked about, and of course you get the speculators at that point. The banks cannot resist getting involved with markets like this. They've made money off of them for years and years, and so we have all these influences that have created a tumultuous market. There has never been a market like this, even in the silver market. And the silver market has been known for a lot of years as the wild, wild west of the markets, but it's been even wilder than usual. Because of that, a lot of people have gotten hurt. People who saw silver get it up to $100 and it was on the news, and so they started investigating it. They thought it was easy money. Some people actually borrowed money in order to buy silver, thinking they'd be able to pay off their loans with higher priced silver. But of course, we know what happened. The party ended just it's hard to believe. 5 days ago, we were at nearly $120, and today we were nearly at $60, or at least late last night. Hadn't halved completely, but it nearly is half of what it was just 5 or 6 days ago. And so this should give you an idea of how volatile the market can be in silver if you didn't already know that. For those of you who've been in it for a number of years, I know you are aware of that, but you have to admit, most of the people got so caught up in the fear of missing out and in the excitement of it all and in their own natural greed that the predictions were just wild for a while. Silver was $100 this week. Would it be $150 next month? $200? $300? $500 by the end of the year? All these speculations came in. And of course, while nothing is impossible, I believe that as we look back on it, this was a little bit optimistic. I've tried to stay away from predicting the market or what direction it's going to go in. I have an opinion, obviously, of what direction I think the market's going to go in, and I make my investments based on that. But when it comes down to it, nobody knows. People who said they were expecting a sell-off, I don't think we're expecting a sell-off of nearly that dollar amount. Now people are going to tell you the bottom is in for sure, go ahead and jump in. They may be right, but these were the same people who were predicting outrageous prices just a week ago. They got burned, and now they're saying that the bottom is in. So be really careful that we may have formed a base. And if you look at the chart, let me put this back up again. I do want to point out that we had a low of $73.67 last Friday. It's been tested once. It actually broke below that and settled by over $1 yesterday, and then it seemed like it was really going down before it jumped back up over this line. So I think you're going to be able to determine that we have fairly decent support at $70 now. It's a line to keep your eye on, because if it breaks that 70 and stays down below there for more than just an hour or two, well, we may have another leg down to go. So that'll give you a hint on that. Right now, we seem to be trading in a range somewhere between $72 and $90. And as long as it stays in that range, I think that you can at least kind of catch your breath a little bit, which I think everybody needs to do. Here's some more information that I think would be good for people to have. The retail market is starting to experience shortages in generic 999 silver and in Eagles. But the big dealers online are not buying it yet as far as buying into it. They're buying your silver, but here are the prices that I found for the big online dealers. Right now, JM Bullion will buy your 90% at $26.50 below spot. SD Bullion, $21 below spot. The best price I could find was Vermilion out of Florida. They're not a big dealer, but they're about $10 below spot as far as buying it from the public for 90%. On the generic 999, JM Bullion is buying it at $15 below spot, and SD Bullion is buying it at $14 below spot. To give you an idea of the local dealers, Vermilion's buying it at $2 below spot. And then for the Eagles, JM Bullion's buying them $10 under spot, SD Bullion $8 under spot, and then Vermilion, the one I checked today, is buying Silver Eagles today at $4 over spot. As far as the sale spreads, we've got JM Bullion is selling the 90% at spot, so they've got a $26.50 spread. SD Bullion selling it at $1 below spot, so they've got a $20 spread. And then Vermilion has a $5 spread between their buy and sell. On the generic, JM Bullion's selling $9.99 at $6 over spot, as is SD Bullion. So one has a $21 spread, the other a $20 spread between buy and sell. And then JM Bullion is selling Eagles at $13 over spot, SD Bullion at $15 over spot. So both of them are at $23 spread on their Eagles. And then Vermilion is a $4 spread between their buy and their sell. They'll buy it at 4 over spot for an Eagle in good condition and sell it to you for 8 over spot. So that gives you an idea. The large online dealers are still very hesitant to buy your silver, and if they buy it, they want to get such a bargain that they just seemingly can't get hurt. I understand their motivation on that. I understand they've been burned, but at the same time, be educated as far as who is paying what before you consider buying or selling right now. And then finally, I wanted to talk about the open interest. The March contract, the first notice of delivery will be February the 27th. So we're just, 21 days away, 3 weeks away from that. The open interest on the March contract is still about 80,000 contracts. They were able to reduce that by 5,000 contracts yesterday when the market fell by about $20. And so they were able to get out of 1/17 of their positions. But still, the open interest has over 400 million ounces of silver where people could take delivery on it. All of them obviously aren't going to take delivery, but a good percentage of them could. And then there's only a little over 100 million ounces in the registered category. So about 1-to-4 ratio right now on the Comex. And so keep that in mind. February the 27th, when people start issuing an intent to take delivery, that could really change the silver market. And so keep your eye on that. Also keep your eye on the ones that are rolling some of these contracts over. Instead of rolling them ahead in time, going forward to maybe the May or the June contract, right now some of them are actually rolling them back to January. Took delivery of 10,000 contracts. February, about 3,500 so far, and we're just at the 6th day in February. So there's a lot of things to keep your eye on. I would definitely be cautious on buying or selling right now. If you have to sell, obviously, just shop around, sell for the best price that you can get, and take care of whatever bills you need to take care of on that. But if you don't have to sell, might not be a bad idea to just stand back on the sidelines. The retail dealers are starting to experience some pretty significant shortages in 999 silver, and some of them are actually starting to run low on 90%. Vermilion, that I mentioned just a moment ago, they were talking about they had a big order that took a lot of their 90% out. So I'm not even sure that they have it available for sale right now. So keep all that in mind. There do appear to be some physical shortages in the retail side that we're interested in. So if you're dollar cost averaging and it's time for you to buy, we are at a lower point than we've been at in a while. So go ahead and do that, but shop around before you make that purchase. And so hopefully all this will give you some information that will help you to understand a little bit of what's happened, especially in the last week, in the last day or two, and also what's going on the more local level as far as your own coin shops and some of the national coin shops when we talk about a bigger basis on that. Anyway, that's the video for tonight. I hope it's something that gives you some information that you can use. If you have comments, please share them in the comment section. I've got another batch of grandkids coming over this evening, so if I don't get back to you immediately, I will try to get back to all of you. I appreciate your comments so much, and so thank you for those of you who've been making those comments. I certainly appreciate those of you who have subscribed and all of you who have watched this video to this point. But hopefully we will see you again next time. Take care, and God bless.